Welcome to the 2023 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me today on this 1/11/2023 Wednesday Hump Day edition. Hope all of you guys had a great day, a productive day. Well, it appears the global economy outlook is heading toward a recession, a mild recession according to many experts, but we know that mild for the 1% is more like a severe recession for all the rest of us. And it's going to be something that's going to spread across the Eurozone as well, United States, and as well as other countries that are developing as well. The global outlook is slashed. We're going to be talking about that in terms of GDP, the gross domestic product. We're also going to be talking about briefly the conversion of attempting of office buildings downtown and other places into these apartments and modified townhomes. This kind of smart growth concept that many cities and counties and municipalities have been doing. Is that good? Housing market also, is it going to be a buyer's or seller's market in 2023? Well, it's yet to be seen. Mortgage rates are beginning to stabilize between 6.4 and 6.5% for a 30-year fixed, but we have to see how that goes. Gas prices are creeping back up as well, ladies and gentlemen, across the country, and that's concerning many of us from all over the four corners of this great United States. So please be sure to subscribe. I appreciate your support, and I read all your comments, and I definitely look forward to learning together and growing together with you as we continue our economic journey and preparation here. So get right into it. CNBC today, World Bank makes big cut to its 2023 growth outlook. We're just in January, we're only 11 days in, and everybody's making cuts to their budgets, to their planning, as they say the globe is, quote, perilously close to recession. Well, that's no surprise there. We've been seeing inflation wreak its ugly head for the last 3 years since we started the pandemic. Inflation has never been below 6% at all during the last 3 to 4 years. It's real inflation right now is at 21%. So this will mark the third weakest pace of growth of nearly 30 years, overshadowed by the global recessions caused by the pandemic and the global financial crisis back in 2008. So as you can see, we're only going to grow at 1.7% globally in terms of GDP, according to the World Bank's estimates now. USA is only going to grow by 0.5%. 0% growth from the Eurozone area there, the EU. China's going to grow by 4.3%. That sounds pretty robust now compared to the other tepid rates that we see here. But, the good news is that this is going to be more of a gradual slide down to a flatlining economy. The patient has been revived, and how they bring out the AED and they, shock the patient back to life. So we're in that process now. We got a pulse, but we're not breathing. This U.S. economy is on life support. So that's the good news. It's going to be a slow downward slide, not just a straight flat line that other countries may experience, like Greece did, or Turkey when their currency collapsed, the economy just flatlined, or Sri Lanka, other countries that you heard about last year. So this is what's going on this year, and the World Bank is going to be making less loans to people and going to be putting more countries in debt. And the United States is leading in the debt conversion. So right now we have, according to MarketWatch.com, a conversion of massive amounts of offices to apartments is a pipe dream, the expert warns. Hard to make money even if local governments are on board. So in other words, they're saying all these office buildings in San Francisco and D.C. and New York and Houston and Dallas and Miami and all these empty tall skyscrapers that used to be condos that were empty. Y'all seen a lot of empty and vacant condos downtown, these big, huge luxury condos and apartments and luxury skyscrapers. The goal was to convert these into apartments, but now they're saying it's a pipe dream because of all the regulations and the office conversions by construction status, year of completion. So right now in 2025, they're saying that, 68% were planned to convert. 68 were planned to be announced to be converted, and so far only one of those are underway this year, as you can see. They had, back in 2023 was the heyday, as you can see. 85 was converted underway, and only looks like none of them was complete, but 85 was underway and 14 were planned and announced. So the completion stopped, as you notice in this chart, back in 2022 with 42 completed conversions from office space to apartment spaces, and 21 that were underway. So it just dropped off. Now, as you can see here, it's projected to drop off in 2024 and in 2025 as well. And the obstacles are obvious. According to this, the floor layout, the layout, the plans, all that's going to be hurting as well. And the most serious obstacle, according to some other people, might be it's hard to make money in the process. The conversion process to try to convert these offices to apartments is going to cost too much money, and there's going to be a lot of sunken costs with builders and developers and permitting needed to convert them, and zoning and all of that. Obstacles are going to create a big problem. And besides, who wants to live on top of a grocery store? I know they're doing this a lot near metro stations where they have a grocery store below and have the apartments above, I guess. But the noise from the trains, everything else going on, and you're living above a grocery store or a CVS or a Walgreens, who wants to live like that in these cities? If anything, most people are trying to get out to the further suburbs and exurbs, or even the rural areas where they can have more freedom to experience nature and to have their kids grow up in in a more safer environment. But this is where we're going. And now housing market experts forecast a buyer's market by 2023. So now they're saying it's going to be a buyer's market. Rent growth is forecast to go up, and it's going to outpace home appreciation in 2023. So for many people who bought that home before the pandemic, say like 2019, 2020, 2018, the home that they sold, they sold the home or downsized, or many retirees, they sold the home, downsized, moved to Florida or Texas, or a state that was more friendly and able to support their financial goals and dreams through retirement. They did the right thing. Or many people who are looking to buy a home, they're saying that this year, experts predicting that this year the housing market is going to cool down. Some of the prices, some of the prices have not been coming down in a lot of these areas, only by a couple of $1,000s. I've seen maybe 5 or 10K up to 5 to 10,000 price cuts, in terms of that. But what the sellers have been doing and developers have been doing is throwing in a lot more incentives, like throwing in more, upgrades, free upgrade, kitchen appliance upgrade, free basement upgrades, free builders incentives, $10,000 off closing costs, stuff like that. That's been growing, but the actual price, I don't see that. I haven't seen that coming down as of yet, but we're still early on in the year. Okay. So they saying in this article that Midwest markets such as Columbus, Ohio, Indianapolis, and Minneapolis are least likely to experience home price declines over the next 12 months, according to the survey, ZHPE survey. And they said that according to some of the largest price growth was in Boise, Idaho, Austin, Texas, and Raleigh, North Carolina. Some of the markets likely to experience price declines over the next 12 months, according to Zillow. Well, we just have to wait and see. We'll have to wait and see how that plays out, because additionally, if you can buy a house, you definitely want to do that in terms of getting away from renting, because that's going to go up tremendously. That's going to outpace the growth of house appreciation. Rentals are going to go up tremendously, especially in large and medium priced cities in America. So if you can, I'm not a financial planner, but if you can wait out another 1 or 2 years to 2024, then definitely these prices are going to be coming down. The sellers are going to be willing to take less than what the offer price is, even though supply is short, because they're going to need the cash to move and to whatever place they want to move to get ready for the severe recession that we're going to be entering, whatever the goals may be. So there's something to think about, ladies and gentlemen, here today as we come in the middle week of this hump day Wednesday. Think about how we're going to continue to support ourselves and our family and our friends without making these adjustments. Because right now the name of the game is downsizing, as well as preparing. So not only economies are doing this, but individuals are doing this. They're downsizing, getting rid of excess things they don't need, whether it's clothes, food, and giving that away, and streamlining the preparations for what's to come later on this year, because we've seen this in the with the outage today with FAA, the flight outage. There could be a power outage, there could be anything that can come up, and you may not be able to get to the store to get the goods that you need. So be thinking about that this week, in the later part of this week. Okay, God bless. I'll talk to you very soon. Thank you much for listening.